Hello folks, welcome to this week's edition of the Satori Traders Market Pulse. Let's jump right in with a monthly chart of gold. I always like to focus on the big picture. The daily bumps and grinds, I pay attention to them, but the big picture is what keeps me focused as an investor. And so in the monthly chart here, the main thing we're looking at is potentially a head and shoulders pattern. We looked at this chart a couple of months ago. And so here's the head. The blue bowl there is the head, and then the pink bowls, those are potentially the two shoulders. And so this bottom is that was March of this year, March of 21, potentially a bottom. And now gold turning back up to complete this shoulder, and then on to, based on the head and shoulder, the target is this 2685. On smaller time frames, the target pulls in a little bit, and so my working target for 2021, late 2021 or early 2022, my working target for gold is 2357. And if this head and shoulders pattern plays out, there's nothing but upside left for gold. It's done a bottom, it's on its way up from here. If we look at, and again, we're in the monthly time frame, we've got a three-wave movement, potentially three-wave. There's wave one. If we clone that, that's wave three there. So anyway, there's a 1, 2, 3. So potentially that's a three-wave completed from an Elliott wave perspective. That's potentially a three-wave completed downtrend, and now we are in the subsequent uptrend. And there are no guarantees in investing or speculating, obviously. Nobody has a crystal ball. The mining stocks tend to multiply the gains in the metals by a factor of 2 or 3. And so 2357 represents about a 28% gain. We might expect 50 to 80% gain in the mining stocks over the next 9 or 10 months. And of course, the best miners will far outperform that. They'll be multiple, they'll double and triple. Newfound gold has already doubled in the last, 5 weeks, has nearly doubled in price. So anyway, this is the big picture. Now let's continue on. Within that context, if we're interested in speculating on the mining stocks, we want to look for the stocks that are likely to outperform. In my opinion, the micro sector that will outperform in this bull market, the gold bull market, are the emerging producers. And so Altamira, they expect to be in production mid-2022. They've got permits in place and are moving in the right direction to be in production in 2022. On a technical perspective, this stock looks good. And of course, let's note, we're talking about a Canadian listed or a over-the-counter to American investors. If you don't have access to the Canadian markets, you only able to access this one over the counter. But it is looking good on a technical basis. All three moving averages are in bullish alignment. Stock obviously got carried away, got a pullback to support here on the upper median line of this shift pitchfork. Investors clearly interested in this stock. We've had some pullbacks in price, but investors have stayed the course. They've remained invested in this stock. MACD full on bull mode and on a buy signal. MACD's looking good there. Obviously, energy is elevated. So this one's looking good on a technical basis. They've got Quentin Henney aboard as their geological advisor. Quentin Henney seems to know how to find precious metals in the ground. So I feel comfortable investing in companies where he is involved. I like to see his involvement in a company. So if we go look at Altamira's corporate presentation, which is out there on their website, obviously. Here's the emerging producer. They've got permits in place for 1,000 ton per day processing plant. Now, they're telling us right up front that they're going to need $6 million. Going to have to find $6 million somewhere to build this plant. If we go back and look at their share structure, one of the things we can notice is that they've got almost 60 million warrants out, and these warrants represent known income. So when these warrants become exercisable, assuming that the current stock price is higher than the warrant exercise price, all of these warrants will get exercised and the company will have that as a source of income. So mixed bag, that's more shares outstanding than we'd probably like to see. One of the nice things about this company's share structure is that the CEO is the largest shareholder, and that's somewhat, it's not the norm, and it's a nice thing to see when you see management taking a serious involvement in a mining company. I like seeing that. So anyway, go look at their structure, go look at their presentation. It's a good one. Gold in the daily time frame. So when we looked at gold last week, we had just gotten this spike up into the upper channel of this Andrews pitchfork, and then follow through Monday and Tuesday, this was looking just super bullish. I mean, that doji candle closing above support on the median line, that was really exciting action. And then, of course, on Wednesday, all of the markets puked about 2%. Notice that gold only dropped 1.18%. And so one of the things we can look at whether we're looking at individual stocks or if we're looking at entire sectors, we can look for the sectors that performed well or performed the best on a day when most of the market was doing pretty poorly. And so Wednesday was an example of that. Most markets dropped about 2%. If you look at NASDAQ was 2.6. So, there's some exceptions, but in general, the markets dropped about 2% on Wednesday. Gold only dropped 1%. So on a relative basis, you might look at gold as being the strongest market right now. Out of all the asset classes out there, investors chose to remain invested in gold on Wednesday. So just something to keep in mind. And then, this chart's just looking super bullish. We got the 50 turning up, prices back testing the 200, all of this sideways bumpy action. This just prices gathering energy. It's going to pop over the 200-day moving average and establish that as support. So, and that's about 1850. The reason I showed this chart first is for context. So when you're deciding, if you're still sitting on the sidelines trying to decide, well, when am I going to get invested in the precious metals market, you got a lot of upside. So even if you wait for gold to establish the 200-day moving average as support, 1850 as support, there's another $500 potential upside from there. And again, obviously I'm a bull, so you got to take my bias into account. But my working target for gold in 2021 is 2357. That's a full $500 higher than where price is right now. So, and again, Super Bowl, take it with a grain of salt. And that's not investing advice by any means. I'm simply sharing with you how I am investing my money. Here in the silver market, one of the things I noticed during the week is this mini channel. So it looks like silver might be kind of bumping its way higher within this channel and gives us a potential target at 2850. So we got this is a upper median line extension of this Andrews pitchfork, and then 2850, that looks like a good target in silver. Super bullish. Yeah. So silver's looking good. The metals are looking good. My opinion, they're being stepped on. They're being managed pretty hard right now. But you know, that's, again, that's a bull speaking, so take that with a grain of salt. In the weekly time frame, the main thing we look at in this chart is confirmation that the mining stocks have moved back into rally mode. And it's pretty clear last week, just another week of, yep, that's looking like an uptrend. MACD, so MACD, we got a buy signal, you know, 2-3 weeks ago, and that's on continuing, obviously energy rising. Daily time frame, again, when we talked last week, we were looking at this candle, which is bullish. And then Monday, it was looking really good. Got a test of 200-day moving average, and then of course the equity markets kind of crapped the bed in midweek. Got a pullback, and then Friday got some nice action. Let's not lose count of the fact that this is an uptrend. So if we start here as low, there's a high. Notice that it's higher than our previous high. So higher high, higher low, higher high, higher low. Definition of an uptrend, folks. So again, you know, everybody has to decide when they want to get involved in a market or whether they want to get involved or not. But we're continuing to get confirmations, additional confirmations, that the precious metals sector as a whole is back in bull mode. Wednesday, we got almost a 3% drop in the mining stocks, so a little bit more than the 2%. Still, same story here. We're just, you know, higher high, higher low, higher high, higher low. I was a little bit surprised last week by SIL that it poked up into this gap. So remember, this is an open gap. I don't have it marked, but that's an open gap. It surprised me a little bit that price popped up into this zone and then found resistance there. I was expecting that gap to get filled. So interesting that turned into resistance. But anyway, silver mining stocks looking just fine. This is the dollar in the weekly time frame. What I notice is that last week we've now dropped below. This is the blue line. This is the lower median line of this modified shift pitchfork. That candlestick is more bearish than bullish. I know it's got a green body, but notice that its upper wick is longer than its lower wick. And what that says is that sellers were able to push price all the way down to this point. So it's at some point during the week, the dollar was way up here, but by the end of the week, sellers pushed it way down here. So this is more bearish than bullish, although it is there on a potential support. You know, it could bounce from that support level. Let's look in the daily time frame. What I notice here is that we got this is another came out of nowhere, you know, blistering fast rally that petered out the very next day, you know, and again, I said it here and I'm saying it again, this is a attribute of a counter trend rally, is that they come out of nowhere blistering fast and then they just kind of go kaput. And so notice here, we defined an uptrend. The dollar is giving us a fine example of a downtrend. So if we take this as our starting high, here's our low, lower high, lower low, lower high, off to what we might expect would be a new lower low. So dollar continues to demonstrate that it's in a downtrend. Interest rates last week sideways for the most part in the weekly time frame. In the daily time frame, so this is where when we talked last week, we had this big bullish doji candlestick, and then obviously we got positive follow through. This doji was pointing out that buyers are in control. So this is the exact opposite of what we're just seeing in the dollar. In this case, interest rates, somebody, I would expect a not-for-profit seller, decided that they wanted to move interest rates, and they pushed interest rates all the way down to this level before the opposite, the underlying trend, which is higher interest rates, showed up in force and pushed interest rates all the way back up to this level, and then that continued into the week with a big push on Wednesday. So when all the, the equity markets were tanking, interest rates were going higher, which of course doesn't help the equity markets. So I suspect that this just pull back to support, and that we'll see the rates head higher again in the coming week. Energy elevated, we're back in bull mode on a MACD buy signal, so no reason not to expect higher interest rates at this point. Equity markets, definitely, they pooped the bed last week. But from the big picture, and I zoomed out. Last week we were zoomed in on this action. This week I intentionally zoomed out because I wanted to look at the big picture. These markets are horribly overbought, and it's not overbought, in my opinion, on any underlying economic strength. It's strictly based on monetary pumping, $120 billion a month from the U.S. Fed, and then the other central banks are all playing the same game. Last time I saw the numbers, we're at about $300 billion per month that the central bankers are pumping into the equity markets. And of course, they claim that the money doesn't go into the equity markets, but yeah, right. Don't pee down my leg and tell me it's raining, I think is what Clint Eastwood would say. So anyway, $300 billion a month being pumped into the equity markets. And of course, the U.S. markets are some of the largest and most liquid on the planet. So even, the central banks in Europe and everywhere else, that money still flows. Some of it flows into the U.S. markets. So anyway, just a tremendous amount of money being pumped into equities, and it's all fiat currency printed out of thin air. Enough of me babbling. So anyway, big pullback, obviously turned back up towards the end of the week. Within the big picture, all we got was, we're doing an overthrow on the $4,200 level. We're pushing back into resistance at the top of this channel. This pullback got us down to the 50 and almost the bottom of this channel, multi-month channel that we've been watching. And so, obviously we got price back testing resistance at this point. Both the 20 and 4,200 are resistance levels. Still on a sell signal in MACD. Energy obviously down in the tanker. Let's see, Dow, same story. What's really interesting in this chart, so Tim Morge, I consider him really my main mentor. I guess I'd have to throw Richard Russell into that same camp. But Tim Morge, that's where I learned Andrew's pitchforks and other advanced techniques. Tim used all kinds of techniques on charts. And so one of the techniques I learned from Tim is called double the range. And so quite often when you see a vehicle, doesn't matter what kind of investment vehicle or trading vehicle you want to talk about, when you see ranging action and then the vehicle breaks out of that range, Tim pointed out that quite often you'll get a doubling effect. So price will seek to double its original range. And so here in the Dow, if we double this range, we get this upper channel. And coincidentally, there was our price spike into the top of that doubled channel. And so anyway, that caught my eye this week. I can't say enough about Tim Morge, and of course he left us recently. So rest in peace, Tim, and thank you. The NASDAQ, obviously we noted a bearishness way back here, and then this was obviously bearish gap, bearish candle closing that bearish gap, and then we got a big downward movement bounce on Friday. So, but just up to the 50, which of course is going to be an obvious resistance level. Energy's in the tanker. MACD looks like it might be trying to turn back up. You just have to wait and see on that. Oil still bumping along, 70 strong resistance, both as a round number and a prior high. We keep getting tests. As always, this sideways action we can think of, Tim called them energy coils. And he named them energy coils to emphasize the idea that when price bumps along sideways like this, it's gathering energy for its next move. And so the move could be down, could be up. All indications in this chart would suggest that the upward move, or that the next move will be upward, and quite likely will be decisive. Because it has gathered this energy for several weeks now, it will make a decisive move to the upside. So that's enough of the markets. Let's quick look through some mining stocks. So Lion One was looking super bullish last week and then got sucked into the downdraft with the rest of the equity markets. Pullback, testing the dollar level again, got to build some strength. But all expectations that it'll head back up. Again, I note this gently climbing MACD, which is a divergence from the sideways bumping action. Divergence between price and MACD often marks the end of a trend. And so quite likely we're looking at the end of this sideways trend before Lion One starts back into rally mode. So kind of keeping an eye on the U.S. listed mining stocks because I want to see widespread involvement, investors interested in the mining sector. And so this is kind of subtle, this uptrend, but notice here in Alexco, and we're in the weekly time frame, so this isn't just noise, but we've got a steady uptrend going on. Alexco is just nicely climbing up the lower median line of that Andrews Fork. We've got MACD full on in bull mode. We've got a new MACD buy signal. Investors appear to be getting more interested in this stock based on accumulation distribution. Energy is elevated and rising nicely. So technical perspective, Alexco is looking good. Next resistance level would be back at these prior highs. So, somewhere in there, I guess we make that sort of straight line. There we go. So anyway, somewhere in there, 340. So Alexco is looking nice from a technical perspective, and it's a U.S. listed. Avino is another U.S. listed stock. And again, without the pitchfork, and of course this is a shift pitchfork, you wouldn't notice, or you might not notice, that it's in a gentle uptrend, weekly time frame, and just kind of bumping along, support on the 200-day moving average, resistance on the 50, working on making the 50 support, energy turning up, bull mode on MACD, but still on a sell signal. Investors lost interest. Obviously, this stock got sucked into the silver move. If we look at their corporate presentation, one of the things I noticed, one of the first things I look for in these corporate presentations is the share structure. I want to see how many shares are outstanding. And so the first thing I noticed in Avino is that I had to flip all the way to slide 21. So we're on slide 21 in their presentation before they're going to tell us about the share structure of the company. Actually doesn't look too bad on the surface, 100 million shares outstanding. But then I noticed this, and so the retail float's 90% of the company. Most of this company's shares are available to retail investors. Management does not have a highly vested interest in this company. In contrast to here in Altamira on slide 5. So on slide 5, Altamira is sharing with us their corporate structure because they're proud of it. They got a good story to tell. Hey, our CEO is the largest shareholder. Avino's not so proud of their share structure, and so it's all the way back here on slide 21. And I just, that one of the things I noticed this morning probably doesn't mean anything. And as always, folks, do your own due diligence. Don't take my word on anything. I'm just a good old boy from Texas. What the heck do I know? So Eloro, again, just nice, stealthy, moving higher in this bull mode, uptrend, bull market. There you go. I'm fumbling for words, which probably means we're at the end of this video. Have a fantastic week, folks. Talk to you soon.